Hey everybody and welcome. Thank you so much for joining me. I'm really happy to be here. We are going to talk about a topic near and dear to your heart, whether you are a freelancer, an independent contractor, a solopreneur, or if you're running a company that has got employees, 3 employees, 300 employees. It's all about cash flow. We know that. And because it's a topic that I love, it is something that I study and write about and deal with all the time with my clients because, if you haven't figured this out already, I'm a CPA. Just take a look at me. So cash flow is like a big deal to me, right? So I'm going to share with you just some cash flow advice, the latest trends, the new things that business owners are doing in 2022 to best manage their cash flow, okay? And that's what we're going to get into. So, why wait? Let's go for it, okay? Oh, by the way, before you even start, my name is Gene Mark. Sorry, I should have, introduced myself a little bit better. I run a financial and technology consulting firm outside of Philadelphia. I write every week for The Guardian, the Philly Inquirer, The Hill, the Washington Times, Forbes, and Entrepreneur. And I do a lot of speaking all around the topics. And I talk about issues that affect small and mid-sized businesses. And obviously, cash flow is that kind of thing. So here we go. Let's first of all talk about your financial statements, okay? I have 5 ways that you need to be smarter about your financial statements. And by the way, all these ways, this is not something that I created myself or came up with. I'm not that smart. This is just what my smartest and best clients are doing to manage their financials. So, number 1, everyone I know who really knows what they're doing has a flash report. If you are waiting until the end of the month to get your financial statements from your accountant or your bookkeeper, you are making the wrong move. Because what you need to be doing is you need to be knowing what your key numbers are about your business on a daily or maybe every few days, at least on a weekly basis. Because how can you manage your cash if you don't know what your cash is? Get a flash report done. Have somebody in your office, an admin person, pull up some key numbers from your business, put it onto a piece of paper, put it onto a Word doc, put it onto a spreadsheet, but get it over to you, whether it's email or just laid on your desk so you know what those numbers are. Some of the examples that I have here, what is your cash today? What is your open accounts receivables today? Your open payables, your year-to-date overtime hours, your year-to-date revenues, your number of customers that you have on hand, your job backlog, your quotes outstanding. Those are just some of the familiar things that people are using when they're doing their managing their cash flow, and that is something that I think that you should be aware of as well. So have a flash report, and by the way, make sure when you have this flash report that you're showing benchmarks to prior periods. So if you're showing that you've got $20 in cash in your bank, what did you have in the bank at the end of this year or maybe the same time last year, okay? You need to benchmark and have a prior period. Have a daily flash report. It will help you manage your cash that much better. Number 2, have a 6-month available cash target. My best clients know that they need to have at least 6 months of available cash on hand to really operate their companies comfortably. The average small business has about 2 months of cash on hand. That's not enough. And if we've learned anything from the pandemic, we have learned that having cash in reserve is critical. So it can be in the bank. It can be in the form of credit facilities. It could be in the form of personal assets that you can access if the time needs. You need to have a target of 6 months available cash if you want to manage your cash flow the best way possible. Number 3, read your general ledger. Your general ledger is a diary of your business. It is the backbone of all of your financials. So once a month, just once a month, have your bookkeeper or your accountant print out from QuickBooks or Sage or whatever you're using, have them print out your detailed general ledger for that month. If you're running a typical small business, honestly, it's 20 pages, 50 pages? It's not that big a deal. Sit down with a cup of coffee or a shot of Jack Daniels, depending on how the month went, and read through that general ledger. You will circle it. You will ask questions of yourself. Who is that person that we paid again? What was that expense for again? I don't recognize that supplier, or I don't know who that vendor is, or why do we have that entry in there twice? Circle those items. Ask your bookkeeper about them. The devil's in the details when you're trying to manage your company and manage your cash flow. The details are in your general ledger. Number 4, start a rolling forecast. My best clients that manage their cash know that they want to avoid surprises. So they're always looking ahead. They always know where things are coming at least in the next 90 days, at least. You can be doing the same thing too. It's really not that hard. All you need to do is take your year-to-date income statement, put it on a spreadsheet, and then think about the next 90 days. You know what your expenses are going to be for the most part. Your rent's not going to change. Your payroll's not going to change. Your internet expense, your telephone expense, none of that's good. So you know those levels of expenses, right? You want to know what your margins are on the products that you're selling or the services you're providing. Let's say it's 20%, 30%. Use a number. It doesn't have to be exact. The key is knowing what your revenues are going to be over the next 90 days. That's not an easy question to answer, but it can be answered. How? Well, look at what's in your pipeline. What open quotes do you have? What open projects do you have or proposals do you have? Ask your salespeople as well. What were your typical revenues this time last year or last quarter? You need to come up with a way to estimate just for the next 3 months what you think your revenues will be. And that's what you do. You take your revenues for the next 3 months, you apply the margin against it. Again, an estimated margin, 20%, 30%. You then deduct your fixed costs against that, and you will see what your cash flow is going to be over the next 3 months. It's that simple. There's one final thing that you're going to add in there, and that's any extracurricular things you're going to be receiving or paying. Maybe your estimated taxes or some big your balloon payment for your debt or an insurance payment, something that's like out of the ordinary. Once that's all done, you'll know the future in the next 90 days. You will be able to manage your cash that much better because you know your future. Start a rolling forecast. Finally, consider getting financial statements from a CPA. Now listen, you can get a compilation, you can get a review, or you can get an audit. A compilation is where you just give your numbers to an accountant and a CPA puts them into a financial statement with footnotes for you, okay? A review means you give your numbers to the accountant, they put it into financial statements, but then they ask you questions about the numbers. So like, why did this go up? Why did this go down? This seems a little out of line. Tell me about this. And you give them answers. An audit is where they put the financials together, they review it, they ask you questions, and then they ask for documentation to back it up. In most cases, if you find a good accountant for your business, a good one that's got experience with other people in your businesses, they can probably do a compilation for you. Maybe do it once every other year if you don't want to do it every year. It will cost a few $1,000s, but if they're good, they will look through those numbers for you and they will give you some advice. They will compare you to their other clients in your industry. They will help you with some cash flow thoughts and tips about your business because you need that extra set of eyes that are looking at those numbers. So, have a good flash report. Should be daily, but maybe every couple of days is fine. Have a 6-month available cash target. Read that general ledger once a month. Start a rolling forecast. You don't want any surprises. Get your financial statements from a CPA. Those are the things that smart business owners are doing to make sure that they are managing their cash from a financial statement perspective. Let's keep moving on. Cash flow is being impacted because of inflation and supply chain. We know that right now. It's going to hopefully get better throughout 2022, but the issue is still going to be there. So let me just give you some thoughts or share some thoughts with you on what some clients are doing to manage their supply chain that much better, okay? Number one, right? They're increasing prices and communicating with their customers. If you haven't increased your prices, obviously that's something you need to be doing. A little bit of a tip on that. Use a customer relationship management system, a CRM system, so you can be communicating with your customers frequently and apply those price increases not across the board, but to specific customers or specific product lines. You don't necessarily have to just have a 10% increase in your prices. Show some love for your better customers, a little bit less love for your not so great customers, but apply those price increases on specific groups, products, and customers, and then communicate that to them. That's what I am seeing by a lot of my clients out in the market that will help you with your cash flow. Number two, consider shrinkflation. You know what shrinkflation is? Shrinkflation is a term that means when a company is selling a product for the same price, but they're selling a little bit less of that product or service. And it's happening all over the place. And the biggest brands are the ones that are practicing it the most. You want some examples? Well, here's an example for you. Walmart paper towels used to be 168 sheets per roll. Now it's 120 sheets per roll. Same price. Doritos used to be 9.75 ounces per package. It's now 9.25 ounces per package. Same price. Get it? Hefty bags. Used to be 90 bags in their mega pack. Now it's 80 bags, but it's the same price. Charmin toilet paper used to be 650 sheets per roll, but now it only contains around half of that for the same price. Do you get that now? All these big brands, people all over the place are practicing shrinkflation. I mean, look, listen, even Jonah Hill is practicing shrinkflation this year as well. It is a practice where you take a product or a service and you give a little bit less of it for the same price. It's the same thing as raising your prices, but you're kind of doing it in a little different way. Does it sound unethical, immoral? It's not. It's just what businesses are doing to make sure they can manage their costs and their cash flow that much better. So increasing prices, communicating with your customers, considering shrinkflation, locking in long-term agreements to keep your cash flow the same, which means using tech tools like Jotform, for example. Just a few words about Jotform. They are the sponsors of this presentation. They are an amazing online application for collaborating and sharing data and information among your work group, wherever they happen to be. So when I talk about using, tools, and long-term agreements, Jotform can be used to create agreements between two parties. There's some template examples on the website that I'm giving you now. The more of these agreements that you practice and make them easy and efficiently to change and to sign, you can do this using Jotform. And that way, if you've got any long-term suppliers, long-term vendors, any partners where you can nail down prices for the foreseeable future, or at least agree on what those prices will be, those increases, it will make you easier to manage your cash that way. Jotform also can be used to collect companies' information for like supply chain process as well. There's a great example of a manufacturing supply chain form template. This way, you're keeping better information about your suppliers so you can better manage your costs and better manage your communications as well. So leverage technologies like Jotform, for example, to not only do long-term agreements with your vendors, your suppliers, your partners, but also to collect information and leverage your relationships with them. That is what I'm seeing a lot of my clients do. They're locking into those long-term agreements and they're leveraging platforms like Jotform to accomplish doing that. In addition, interest-bearing accounts are now back in vogue. We didn't have to worry about interest-bearing accounts before because there was no interest, but trust me when I tell you, throughout 2022, the Fed will be raising interest rates at least 2 to 3 times. We're going to be seeing interest rates probably go to anywhere from 3 to 4% for business loans. Same thing on percents that's paid on interest-bearing accounts. So if you've been leaving your money in your checking account for the past few years, I get it, because interest rates have been like 0. Now they're going up. So it's time to open up those money market accounts, those interest-bearing accounts, because it could mean some money for you in the next couple of years. Consider TIPS. Treasury inflation protected securities. These are securities that are being used that they benchmark inflation. So whenever you buy these securities and inflation rate goes up, your return and interest on those securities will also go up along with them. So TIPS is great. Talk to your financial advisor about it. Buy inventory and property, plant, and equipment. In an inflationary environment, the best use of your cash is to invest in long-term assets. And if you invest in equipment, if you invest in inventory, because you know your inventory, buy it now while the price is lower, particularly if you know the price is going to be going up in 2022. If you've got a place to store it, store it. The same thing with capital equipment and property. I'm just telling you, this is what I'm seeing my clients do. This is the kinds of moves that they are making. They're buying this kind of stuff now because they know that even if they put the money out there, they'll get it back in a more profitable way in the future. And if you're like, hey, I don't know if I have all the available money to do this, the best deal for financing is from the Small Business Administration. Go to an SBA lender. Ask about a Section 7A or 504 loan. Those are loans for up to $5 million. Current market rates, periods of anywhere from 2 years to 15 years to pay them back. It's government-backed loans, so the bankers have every incentive to give them out. And if you get a government-backed loan from an SBA banker, and you can find a local one on sba.gov, you will be able to get the financing you need to buy the inventory that you need and to help you manage with all these other actions that you're taking to navigate your way through the supply chain. And finally, you want to invest in technology, okay? So we mentioned platforms like Jotform, for example. Those are the kinds of technologies that you want to be investing in to make sure that you are you're keeping your cash flow as low as possible. Always be looking for good technologies like a Jotform that can increase productivity in your business. That is what my best clients are doing as well. So, increasing prices, communicating with your customers. Practicing shrinkflation if you can, selling the same, for the same price, but less product and service for that same price, right? Locking in long-term agreements, leveraging platforms like Jotform to do that. Revisiting your interest-bearing accounts, getting them set up and moving money into them. Considering investments like tips, buying inventory and PPE, getting finance from the SBA to buy that inventory and PPE, and investing in technologies wherever that you can. This is what American business owners and leaders and managers are doing in 2022 to manage their cash in a higher cost inflationary environment. Okay? All right, here's what we've learned so far. Number one, be smarter about your financials, right? We talked about a whole bunch of tactics to manage that, from having a daily flash report to reading your general ledger. Number two, be smarter about your supply chain issues and challenges. Practice, communicate with your customers, increase your prices, maybe do shrinkflation, leverage technologies like Jotform to lock in on long-term agreements as well. All right? Okay, let's keep moving. Receivables. Let me share with you 7 things that my best clients are doing to manage their accounts receivable in their businesses. All right? Number 1, enforce strict credit policies. You want to do that up front. Obviously, you can use a barometer to do that. So, if you're selling somebody something for $500, maybe you don't have to spend so much time on enforcing their credit. In fact, we'll talk about accepting credit cards in a minute, but it may not be worth the bother. However, if it's a bigger deal, you really want to do the due diligence up front to check out their credit. Look at a Dun & Bradstreet, for example, or a credit investigative place that can help you make sure they've got the credit to do what they got to do. Okay, number 2, where you can, get deposits up front. If you're in the construction business, if you're in the service business, it is not uncommon to ask for your customers to give you a deposit. If you can get 20% or a third of the money up front, which again, people not unreasonable to ask for nowadays, it will help cover your cash flow because you're going to be putting the money out to pay for labor or materials if that work is going to be done. So do your best to get that money up front. If you haven't been doing that with existing customers, it's going to be very, very tough to change that, right? So don't worry about that. We're talking about new customers now. That's just what your policy is for new customers. And over time, that will take up more and more of your customers where they're used to giving you deposits up front. Number 3, accept credit cards where you can. It drives me nuts when people don't accept credit cards and only accept cash. They don't want to pay the credit card fees, or the mobile payment fees. Those fees can easily be baked into your prices. Talk to your accountant about how to do that. Because if you are accepting a credit card and you're paying a 3% transaction fee on that, if you build that transaction fee into your overhead, adjust your pricing just a little bit, it will cover that transaction fee. You don't have to charge customers extra or make a big deal about it. That way, you can accept payment however a customer wants to pay, and you need to be able to do that. Do not turn customers away because you don't accept their form of payment. That is letting business get away, and that is impacting your cash flow in a very negative way. Bill and collect online, of course, wherever you can. So every accounting application I know, all the popular platforms, Xero and QuickBooks and FreshBooks, they all provide online invoicing, and they all include the ability to pay for those online invoices right off the invoice. I do that with my business. We're a service firm. I mean, we sometimes invoice for thousands of dollars, but we put a little button up there for the credit card, to be used. And we use it. I know there's a fee involved, but like I said earlier, I bake that fee into our overall cost structure. But we send out that bill right away. And we do not wait until the end of the month to do our billing. We do it when the service is performed, because every day that you wait has a negative impact on your cash flow. Focus on your slow payers. You know who they are. And frankly, they're a handful. You know that the 95% of your customers, they pay on time. They're good. That's what the people do, right? You got the 5% of your customers that don't. Those are the deadbeats. I know that. We all have them. We don't like that. But my advice to you is to don't worry about those customers that are paying on time. Those are the good guys. You do want to focus on the slower paying ones. Maybe outsource your credit and collections to somebody, even if it's just an independent person that you find on Fiverr or LinkedIn, somebody that can do the collections for you, but only focus on those payers that are the slowest, okay? Number 6, Schedule reminders in your CRM system. I talked about customer relationship management systems before. There are a lot of inexpensive ones from like Zoho and Insightly and Nimble and Sugar, and there's a bunch of them that are out there. Excuse me. If you have a good CRM system, you want to put those slow-paying customers in there. When you have an invoice that goes out to them, just schedule a reminder like a few days before the invoice is due so that they can either get an automatic reminder or somebody in your office is just personally reaching out to them and saying, hey, see your invoice coming due in a few days. Everything okay? Is this still scheduled for payment? Anything you need us to do? If you're more proactive with your outstanding receivables, you will collect them faster, and that will help your cash flow. Finally, I mentioned this earlier, outsource your collection. One of the best things I ever did in my business, and I did this years and years ago, is that I used to be getting invoices, doing work, invoices were out there, I'd be going through my accounts receivable schedule and I see a few people wouldn't pay on time, and I had already paid my people or paid for materials, and it used to drive me bananas. So you know what I did? I outsourced it. I went to, I hired somebody, a bookkeeper that I was using, and I said, listen, I'm going to spend a few more hours a week. You deal with the collections. I got it off of my plate. I had less nausea because of it. She was the one that dealt with all the collections. She was very good at it, and only brought to my attention when things really became outstanding for a long period of time. But because her tenacity on it was so good, she really took that problem away from me. Outsource your collections. It is not something you should be spending time on as a business owner. You spend time on what you do best. Let somebody else do that dirty work, because it ain't pleasant to do, and it's just going to put you in a bad mood. Those are 7 things you can do to be smart about your receivables, right? Forcing credit, getting money up front, accepting credit cards and baking in the fees to your overhead, getting your bills out immediately online with collection online, focusing only on the slow payers. Don't worry about the others that are out there. Scheduling reminders in your CRM system and outsourcing all of your collection activities. Do all of these things, and I promise you that will have a positive impact on your cash flow in 2022. You guys are still with me, right? I just want to make sure nobody's falling asleep here, right? I mean, I know it's accounting stuff. We've talked about financial statements and payable, receivables, and whatever. So we're good, right? Because I still got half this presentation to go, right? Okay. All right, here we go. So we talked about receivables. Let's talk about payables. Okay, this is the money that's going out from your business. So here's 7 ways to be smarter about your payables. Way number 1, only pay twice a month. Don't just be paying payables when they come in. Have a schedule, organize it, have some rules. Maybe it's the first and last Tuesday of every month, or the 10th and the 25th. No payments go out between those dates. Your vendors and your suppliers will get used to that schedule. That way, you've got some order to your business. You know that the 10th is coming up in a few days, so you can see what your open payables are. You can match that against what your cash is and what receivable is expecting to come in, and you can think about how you're going to manage that and how that's going to happen. You can be much smarter about how you're paying your payables. The clients that I know that don't follow this rule, it's a mess. They've got checks going out all over the place, checks coming in all over the place. There's no order to what they're doing. Get it calm and only pay twice a month. That will have a positive impact on your cash flow. Number 2, pay on time or early. I mean, when I hear consultants say, hey, the best thing to do is to finance your payables off of your vendors, I think that is like the worst advice ever. Because your vendors, your suppliers, they're partners in your business. How would you feel if you were selling something to somebody and they're monkeying around with your cash payment because they're financing off of your business, right? How would you react when that same customer comes to you with a special order or a rush thing or something that they really need and that they have a history of paying you late? Not so good. Well, how would your vendors and partners feel if you were doing the same thing to them? Pay your partners early. Pay your vendors early. They will jump to attention. They will treat you well. They will make sure that they're always there with the product and services you need. And by the way, if any suppliers are still out there dumb enough that are doing those discounts like 2% net 10, take advantage of that, okay? I mean, pay them early and take advantage of that discount. It is way more of a return that you'll get, way more money you'll make than leaving the money at the bank where right now interest rates are so low. That might become less of an option as we go further and interest rates go up, but right now it's a great deal to take advantage of, right? Use accounts payable management software. I have a ton of clients that are leveraging these platforms, Bill.com, AvidXchange. use AvidXchange or Bill.com, all of your suppliers, they just email their invoices to them. And then their software is able to extract the data from the invoice, put it right into your accounting system, notify you for approval, and then set it up to just immediately online pay on the 10th or 25th or whatever the date is that you've set up for your payments. It takes so much effort out of the whole payables process. It reduces the amount of admin time and potentially people that are spending time doing this kind of stuff. And it just makes things a lot easier, particularly for recurring invoices. So I have a lot of clients that have invested in Bill.com and AvidXchange. There's a few others that are out there. Very, very good accounts payable management programs. They will really, again, help bring more order to your payables process. Pay more by credit card. A really great service that I've loved. I've worked with them before in the past. They're called Plastic. What Plastic does is you can use your credit card for any vendor, whether or not they accept credit cards. So if you want to pay for a purchase and you want to pay using a credit card, and the vendor's like, hey, we don't do that. We don't. Say, all right, I'll pay through Plastic. You pay Plastic. Plastic will send the vendor a check on your behalf. Now, yes, there's a fee if you're doing that, but hear me out on this. Number one is great for big purchases. No interest on your credit card, assuming that you pay the credit card off that month, so you don't have to worry about that. You get points for the purchases as well, and if you are doing overseas transactions, you want to buy a bunch of supplies from somebody in China or somebody in Ecuador, it's so much easier to do it with a credit card than trying to arrange a bank transaction to do it as well. So using Plastic and paying by credit card, another great way to control your cash, particularly the disbursements are going out the door. Number 5, I think I spoke to you about this before, but outsourcing. I told you about outsourcing for credit and collections. I'm just a big believer in outsourcing everything you possibly can. Outsourcing your payroll, outsourcing your marketing, outsourcing your accounting and bookkeeping, outsourcing your quality assurance and control. Those are the kinds of things that companies do so that they don't have to bring employees on, they don't have to make that commitment, they don't have to pay the payroll taxes or pay extra for benefits. And if they're just specific tasks that are being done, it is something that can be easily managed by an outsourced freelancer or a professional. And people that are in that business love to be independent, and good for them. So you outsource where you can. That way, you let those experts do what they're doing. You do what you're doing. You know what you're doing in your business. They know what they're doing in their businesses. It will also help you very much manage your disbursements going out. Auditing. You have electric bills, you have shipping bills, you have insurance bills. You don't know these bills. You look at a utilities bill, you look at a bill from your cable provider or your utilities. I've looked at a bill from Pico, which is our electric company. It's like you have to have a master's degree in reading these invoices to understand the fees and the tariffs and the taxes and the duties and all the extra things they get. It's tough. And guess what? These large companies, the utility companies, the insurance companies, the freight companies, the cable companies, they make mistakes all the time. And we just don't have the time to figure that stuff out. So you know what? Get audited. Go online and look for utilities consultants or insurance consultants or shipping consultants. There's a boutique industry for all of these that will take these bills for you, review them to see if it's proper, negotiate any changes, any errors that they find, and then they'll take a fee, maybe 20 or 30% of what they saved you, which is fine because you wouldn't have found that yourself anyway. So you still get to keep 70 or 80% of the money. So if you really want to cut some cash disbursements going out, I think it's really time for you to take a look at some of the bills from these big companies, because I'm telling you, the mistakes that they made are costing you a lot, and you're not finding them. Hire one of these outsourced cost consultants to look at this for you. And again, they all work on a per fee basis. Finally, require vacation of your employees. Now, this is an internal control thing, but I just want to make sure you're aware. If you ever see any cases of fraud in the world, where like some little old lady that's a bookkeeper of a company stole $1 million over 10 years from the company she worked for, or some guy that works out in a warehouse had a side business selling pork bellies because he was receiving pork bellies before they got logged into the ledger. There are people committing fraud all the time. The best way to detect fraud among your employees is to require them to take vacation. Because if they take vacation and they're out of the office, somebody has to fill in for them. Not only is that great for cross-training, but if you look at how fraud has been detected, Overwhelmingly, it's because the person that's doing the fraud either took vacation or had to go to the hospital or missed some days because of whatever. Somebody filled in for that person and we're like, huh, that's weird that it's being handled in this way. Or I don't recognize that invoice from Jane Smith Co. Isn't that the same name of our accountant as well, Jane Smith? When other people have other sets of eyes looking at the work that people are doing, oftentimes mistakes and potentially fraudulent things are detected. And when that happens, you can take action against it. The only way that you can protect yourself against that is to ensure that people are required to take vacations. It is a great control over your cash. So pay your vendors twice a month, pay on time or early, use accounts payable management software, Bill.com, AvidXchange, pay more by credit card. I love plastic as a service to do that. Outsource wherever you can. Let them do what they do best. You do what you do best. Get audited. Find these cost containment services. They will review your bills for these big companies that are making mistakes all the time and require vacation of your employees. 7 ways to keep better control over your payables. All right. So we've learned about being smart about your financials. We've learned about being smarter about some inflationary in an inflationary world. We learned about controlling your cash with your receivables. We learned about controlling your cash better with payables. Okay. Let's talk about financing. So you're looking for money to run your business. I've got 5 thoughts for you to take advantage of the financing opportunities that are out there. Thought number 1, look for private grants. Everybody and their mother wants to be giving money to small businesses now to show how much they support small businesses. You've got states, the federal government, more importantly, private companies, everyone from FedEx to Intuit to Verizon to all the big brands. They all want to show how much they love you, the small businesses of America. Good for them. And in exchange, you might need to give them a little PR or write something nice about them on your website, but that's okay for the money. Go to this. This is a great little listing on bench.co where there's a blog where they have all the listings of small business grants that are available. It gets updated frequently as well. It's a very, very good resource for you. Get some grants. Remember, a grant is free money that you can get from any of these private or public sources. Why leave it alone? And by the way, if you're a minority business owner, if you're a female, if you're black, if you're Hispanic, there are some great opportunities for grants out there for you as well. You're crazy not to take advantage of them. All right, spend a little bit of time. There's a lot of money out there for you. You can put it to really good use. Take advantage of them. All right, number 2, look for government grants. Now, those are all private grants I mentioned earlier, but the federal government is giving out hundreds of millions of grants every year to small and mid-sized businesses. Go to grants.gov. Every department of the federal government is looking to hire and give grants to small and mid-sized businesses all around the country. They have mandates to do that as well. And they have even further mandates to support minority-owned businesses as well. Again, female-owned, black-owned, Asian, Hispanic. Listen, if you're in that category, there's money out there for you. So go to grants.gov and you can see a listing of all of the grants that are available for all businesses across all industries and all departments of the government. Find something that matches you and apply for one and keep doing that year after year. Number 3, factoring. If you have a large invoice from the government is your customer, or a school system is your customer, or a foreign company is your customer and you're waiting for payment because that's what happens, right? Maybe you're in the construction business and you're a subcontractor to a subcontractor who's a subcontractor to a general contractor who's working for the federal government and everybody's waiting for those payments to come in. It has a huge impact on your cash flow. Selectively factor those invoices. Go to bluevine.com. You can pull out a specific invoice, say like a $10,000 invoice that you know is going to take 10,000 years to get paid because it's the government. Sell it to Bluevine. Bluevine will collect it for you. They'll keep, I forget what their fee is. You can ask them 5%, 10%, whatever it is. It's worth it because that's money that could be collecting interest or being put to better use if you had it in your pocket. But if you don't have it in your pocket because you're waiting for it for so long, selectively choose those invoices and hand them over to a factoring company like Bluevine. Fantastic service that you can then use to generate more cash for your business faster, right? All right, number 4. I mentioned earlier about those SBA loans, a 7A or a 504 loan. That's where you go to get your financing. It used to be the economic injury disaster loans and the paycheck protection loans during the pandemic. That's all gone, okay? but you can still get government-backed loans. One other thing about these SBA loans, I mean, again, the government guarantees 95% of those loans to the banks. The banks can't lose any money. So you're going to get it through the bank. You're going to go through a due diligence process, but the banks have quotas and mandates from the federal government that they got to be getting this money out there. So it's got to be coming to you. Take advantage of that. Finally, sell shares to your employees. Just a few words on employee stock ownership plans. I don't care what size of your business you have. Maybe you're like 5 employees. Maybe you're 500 employees. But let me tell you something about these ESOP plans, okay? If you go to employeeownershipequals.org, that is a website that was set up just last year by a number of nonprofits that specialize in employee ownership plans. They can give you specific advice as to what the best ownership plan is for your business. When you implement it, here's what it is. You can sell your business or a portion of your business to an entity that's owned by your employees. By the way, that entity could include yourself as well. You can determine who owns the portion of that entity based on their employees' tenure with your business or their position or their title or whatever. So you can work all that out, right? When you sell that portion of your business to that entity, a bank will finance that. So you'll get the money. You get the money for those shares. So say you sell 20% of your company, a bank will give you the cash for that 20%. The loan goes on the company's books and gets paid off by the company. And by the way, the loan payments, tax deductible. And any income that's allocated to that entity that's owned by your employees, tax-free. So it's a tax-free thing you can do for your employees, financed all the way, paid off by your company with a tax deduction. You get some cash to exit out. And what a great benefit to provide to your employee, a great ownership of your company. So consider selling shares to your employees as another way to get financing needed to buy out your business all together at one time or over a period of time. Those are 5 ways. Getting grants, both privately and from the federal government. Considering factoring for your big invoices. Getting a 7A or a 504 loan from an SBA banker. Selling some of your company to your employees. Great way to raise money for yourself, how to get financing for yourself as well. It's another thing that will significantly impact your cash flow. You're still with me, right? Still with me. Okay. We got one final thing we're going to go over, and that has, I don't want you to fall asleep now, okay? But it's taxes. Right, now listen, don't turn away. Because what? Taxes are what, like 20 to 30% of your income? I mean, it's like something like your biggest expense. So meet with your accountant this year, okay? Sooner rather than later. Ask him or her about these 6 things. Ask them about the employee retention tax credit. It is this giant pandemic-related tax credit that was started by the government that allows you to get a credit on the payroll taxes you paid if your business was impacted by the pandemic. There's certain rules about that. It expired at the end of 2021, but if you were eligible back in 2020 or 2021, you're still eligible to go back and amend those payroll tax returns, the federal payroll tax returns, to collect the money. So it's a giant tax credit against your payroll taxes that if you are eligible and you can claim it, and the credit is bigger than what the payroll taxes are that you paid, the government will give you cash back. So talk to your accountant about the employee retention tax credit. Number 2, take advantage of the work opportunity tax credit. That is a credit for up to $9,600. If you hire someone out of prison, out of the military, off of welfare, or who has been unemployed for 6 months or more, sound familiar, you can get a $9,600 tax credit for that specific employee on your taxes that year. Regardless if you're a S corporation or partnership or regular, it's for all business owners. So the next time you hire somebody, talk to your accountant about taking advantage of this work opportunity tax credit. You might want to share some of that money with your employee, that new employee, as a hiring bonus as well. Might make a difference in enticing them to come and work for your company. Number 3, if you lost money in 2020, 2019, or 2018, any one of those 3 years, you have a one-time opportunity to carry back that loss 5 years to a taxable year where you made money and paid taxes, so the government will give you back the taxes that you paid in those prior years. That is also a pandemic-related thing. So I don't care why you lost the money, neither does the government. If you lost money in any one of those 3 years, talk to your accountant, amend the return, carry back the loss 5 years, then whatever taxes that were paid back in the past, the government will give you that money back and put it into your pocket. Another great way to increase your cash flow. Number 4, clean up your balance sheet this year. Get rid of those old receivables. Get rid of those old inventory. You can't get a tax deduction unless you write off those numbers. So if you don't expect to collect those receivables because they've been outstanding for a long time, I know we're all optimistic, write them off. If you're walking around and you see old equipment and old inventory that's in your business and it's been around for a while and you had aspirations when you bought it, it didn't happen, it's fine, happens to all of us, get rid of it, dispose of it. That way you can get a tax deduction for it. Clean up your balance sheet because there's big tax savings right now in your receivables and your inventory. Number 5, invest in equipment. You can spend up to $1 million this year. It's actually a little bit more than $1 million. Get an immediate tax deduction. You can buy furniture, computers, equipment, a forklift, anything for your business. You can write it off immediately. One trick on this, though, you don't really have to pay for it this year. You can get an SBA loan or some other type of financing, and maybe you can defer the payments until 2023, depending on what the loan terms are. As long as you put the asset into service, you plug it in, you start using it during the year, you get 100% of the deduction. So say you buy, something for your warehouse for $20,000, some new pallets, and a new forklift or something like that. Take the full deduction this year, even if you're financing it and you haven't really started paying it back yet. The IRS will let you do that. Finally, employ your kids. I mean, listen, you can take you don't want to put your 6-year-old behind the phones, of course, right? But at middle school, high school, you take your kid, you put him to work, you pay him up to like $12,000 because that's what the standard deduction is for us individually. Your child will pay no taxes other than a little bit of payroll taxes, and you get a full deduction. And by the way, it doesn't be related to you. There's no relationship rule here. So it could be any of your employees' kids. It could be any kids. It could be a kid from a neighborhood. But take advantage and give kids the opportunity to work, teach them what to do, spend some quality time with them. You get a tax deduction for paying them, just like any employee, but the kid doesn't get taxed on it at all. It's a great way for them to make some money and put some money hopefully into savings as well, so that it can benefit both parties. So that employee retention tax credit, talk to your accountant. The work opportunity tax credit, talk to your accountant. Carrying back any losses you might have had in 2020, 2019, 2018, talk to your accountant. Cleaning up your balance sheet, writing off receivables and assets and inventory, get rid of the old stuff. Tax deductions are there for you this year. Buy some capital equipment, finance it for the future, take the full deduction this year. Hire your kids or somebody else's kids, but hire them. They can get, they won't be taxed on it if you pay them under 12 grand, and you can get a deduction for doing that. That's 6 ways that you can be smarter about your taxes in 2022. All of them will generate more cash for your business. So we've learned about being smarter about your financials, right? The flash report, reading your general ledger, having an accountant do a compilation, for example, right? Doing your rolling forecast. We've talked about managing your cash through an inflationary time, locking in long-term agreements, leveraging technology like Jotform, for example, practicing shrinkflation, raising prices where you can, buying inventory, buying PP&E. That's what people are doing in an inflationary time to maximize their cash flow. We talked about being smarter about your receivables, taking deposits up front, using credit cards, outsourcing your collection. Those are all different things that you can be doing to manage your receivables that much better. We talked about being smarter about your payables. Only pay twice a month. Pay your vendors on time or early. It's important. Use credit card services like Plastic, for example. Leverage accounts payable management technology like Bill.com and AvidXchange. All great ways to improve your cash flow when it comes to your payables. We talked about your financing options. Get grants. Get SBA loans, right? Don't finance off your vendors when you've got all these other different financing opportunities that are out there. we talked about being smarter about your taxes. So take advantage of the employee retention tax credit, the work opportunity tax credit, the rolling back your losses for the past 3 years, writing off your receivables and inventory, hiring your kids, buying fixed assets and capital equipment and taking the deduction for it. These are all things that businesses are doing in 2022 to maximize their cash flow. Now, this might change over the next few years, but I'll be back hopefully to give you some more instructions on what you can do. You implement any of the things that I talked to you about today, I promise you it will show up as more cash in your bank account. So remember, smart business owners, always thinking ahead, right? They're doing their forecasts. They're thinking about where they're going to spend their money. They're planning out their cash flow. They don't want any surprises. These are all moves that you want to be doing. Well, not this move, but these are all moves that you want to be doing this year to maximize your cash flow as well. I want to thank again Jotform. Okay, Jotform provides very inexpensive, very affordable, and very powerful workplace collaboration tools. It's an ecosystem for users to manage their data in one workplace with one company wherever your employees are. It provides these really simple online form builder tools. And they've recently released new products to create an all-in-one workspace for users. I have so many clients that use these Jotforms tools to manage their data, get data into other applications or their website because it is so easy to set up and integrate with other places. They give you a PDF editor, mobile forms, a great report builder, and tables now. Like it's a database that you can track this information. All shareable, all very easy to set up, all very affordable. Strongly recommend that you use Jotform. I use Jotform in my business. I have a lot of clients that use Jotform as well. Very, very powerful tool for small and mid-sized companies for sure. So I want to thank you. My name is G. Marks. This is my book, by the way. You can buy it on Amazon, but you know what? If you want to send me an email, I am more than happy to send you a free copy of it by ebook. No problem at all doing that. Just send me an email. That includes lots more. I have 100 ideas there. I've only shared with you just a portion of them on this presentation. The rest of them are in this book. If you have any questions or if you'd like a PDF of this presentation, email me as well. I'm more than happy to send it out to you. Thanks for joining me. Hope you enjoyed this. Hope this helps you. Hope you can take some of these ideas back with you and generate more cash for your business. Thank you to Jotform, and thank you guys for watching. My name is G. Marks. I'm sure we'll see you again next time. Take care.